Hey everybody, I am Charting Man Dan with the Chart Guys, joined today by Chart Guys Lamont. Hey Lamont, how are you?
Hey, what's going on? Doing well. How are you, Dano?
So in this webinar, we're going to be talking about volume profile analysis. It is a style of technical analysis that Lamont has been mastering for quite some time. And Lamont is a former Chart Guys member 7 or 8 years ago, and I could recognize that he knew what he was doing. And he was good at explaining things to other people. And so here we are many years later, where Lamont is going to help explain to us volume profile analysis and how we can utilize it. And I personally, it's very different than my style, but I've been utilizing it a bit more and more in terms of how I view things. And one of the biggest examples is I'm no longer viewing things as a singular price point. It's more these ranges that Lamont's going to explain a bit more in depth to us. So first off, Lamont, if you can share your screen, I want to imagine that we're pulling up a TradingView chart, blank by itself. We'll look at QQQ first, and essentially want to see your process of first what indicator are we using, and from there, what is standing out to you to help you draw your key levels, and what are they called?
Sure. Okay, so the indicators in TradingView, I assume most folks use TradingView. It's over here. You just pop into the indicators menu, go to the technicals, go to the profiles, and then here they are. This fellow over here on the side is the visible range volume profile. And then the one that we use very regularly for specific trade setups, this is kind of like a quick glance view. It's going to show you all of the volume distribution for whatever candle is currently visible on the chart. So if you zoom in, it's going to change. So again, it's just really a matter of like a quick glance tool. And the fixed range profile is the one that we're going to use very often, but do not use this one. For whatever reason, if you click this and then you draw the tool and then you switch to something else, it's going to create it there as well. For some reason, it's just a trading view bug that's been occurring for a long time. I get a lot of questions about it. And so where you want to go is in here and then pop on over to the, let's see, one, two, three, four, fifth guy from the top, and then the fixed range volume profile here. If you do it like this, then it's not going to populate on every single chart that you change to. So that's definitely something that it trips up a lot of people. It's a very weird bug. But anyway, the fixed range volume profile, I got it saved over here. If you star it in TradingView, so let me bring that back here. If you star it, just drop the star over here, it's going to show up on your shortcut menu over here. So that's where the tool is found. And the reason why we care about the fixed range volume profile tool is because we want to be able to identify areas that are significant. And they're significant because of value, right? So, very often we talk about price and volume, right? Price is king, right? Volume is the prove it indicator, as Daniel would say. And I would say that if the price is king, then value is kind of like the populace, right? Where a leader needs the populace to support it. Otherwise, it's not really that meaningful, right? Like if you can be a leader, but if the people aren't behind you, they will eventually bring out the hangman, right? Assuming the French Revolution or whatever. The guillotine, I'm sorry, not that's their weapon of choice, I think. Anyway, so that's the idea, right? And so one of the key concepts that I wanted to talk about today to build off of what we've talked about in prior webinars is what I call a gateway structure, right? And a gateway structure is essentially significant based off its location. It's essentially a gateway into a much larger area. And so, for example, right now, if we were to jump into the queues, I would say that the gateway structure into all of this balance over here is this guy over here, right? So this supply, which was the all-time high supply for some time, and I call it supply because we had balance here, so value was established here, and then price broke below it. And so if price breaks below it, then of course we had to have net supply there, right? Sellers were the ones who won there. And so if these buyers are going to advance beyond this area, then of course they need to absorb all the supply there, buy up all the supply, continue to buy more, and then we can advance, right? So what after you draw the fixed range profile on a gateway structure, key structure, or whatever, in order to extend the lines without actually extending the tool out, I just use a rectangle and you just mark it up like this. So I drop it on top of the structure. And you gotta make sure that you go into the settings here and make sure that extend right is selected. and then it'll just create, this infinity line essentially, or two infinity lines. And then I just drop a ray on the point of control. So it's just a purple ray. Again, you don't have to extend right, but the reason why I have everything color coded is because, your brain, your subconscious is very powerful. It's constantly working. And if you just color code all of your tools, this is nothing VP related, but if you color code all of your tools, your brain will have an easier time recognizing all of those things. So I just like to streamline everything because, technical sequencing is really about chunking information and synthesizing information, better than the next operator. And so your brain only has so much bandwidth. You can help it out by color coding things. So on my charts, the value area is always blue. The point of control is always purple. And so I like to mark it up just like this. And then if you want, in addition to that, you could also mark up the highs and the lows of the range. For me, whenever I'm dealing with a horizontal support that is not the value area or the point of control, I use yellow. And so that's going to just be the extremes of the range. And so if you think about a fixed range on a chart as like one session, essentially the regular trading hours high and the regular trading hours low. That's kind of the equivalent, right? So, you could compare one session to this entire structure. And if we zoom out, you'll see that, okay, once we come back to this structure, there's a clear battle for it, right? Where we reject from the value area low, we oscillate around it. This is essentially the buyers now absorbing all of the supply here and any new supply that's coming in. So any new sellers who are looking to sell here, they didn't sell over here, we come back over here, they're now entering the market as sells. Buyers need to absorb all of this supply before finally breaking out, right? And if they do break out, then the next sequence key for these buyers is, can they hold the back test of it, right?
All right,
And
I'm gonna pause you right there. So just a quick
cool.
recap. I'm gonna dumb it down a bit. So you find an area previously looking back on the chart where it was important, right? So it was the all time high where there was a battle that went on, and then that was preceding the biggest drop that we had in the market over the last 6+ months or so. And you identify that area with the volume profile indicator, and then you extend it out. As you mentioned, the colors, that's definitely important for me as well. My EMA has got to be the same color. I'm thrown off if they're different. So you're drawing your own lines, you're extending it so you can see it as it continues through time. And one of the more important factors, essentially what we're looking at, is the supply and demand. We want to see where there's high volume, where there was a lot of exchange of shares or whatever it is that we're looking at. And that tells us this was an important area. This is where the market accepted a price. And the key is one with your style that is also one of my takeaways in how I incorporate it in my style is the back tests, which you're about to talk about, is how important that is to essentially affirm what the chart is showing you. So go a little bit more into the importance of these back tests.
Sure. So essentially, a trend is healthy, right? From a VP perspective, if it just does this, right? If we just trade sideways, create an area of demand, break out, back test it, hold this guy, and then just continue to balance here, break out again, this trend to me is totally fine, right? Because this demand zone is really what we care about. If the sellers cannot negate this breakout from this area of demand, then these buyers remain constructed. So if we just look at the price action starting from this area here, you create an area of demand, you break out, you trade sideways, breakout, trade sideways, breakout. And now that we have broken over this prior supply, the buyers should look to defend it, right? Because the sellers knew that it was significant, but on every side of a sell is a buy. So this area is significant, not just for sellers, but also for buyers. Just because it was net selling doesn't mean that the buyers don't care about it. The buyers, of course, care about it. It's a key area, right? And so once you do finally break out of it with some decent follow through over here, we know that this move is still constructive relative to this prior all-time high structure, as long as it can hold over the point of control. And the point of control is where the most volume was traded in that area. And so the idea then is, of course, the majority of those buyers from here are being proven correct as long as we're holding over the point of control. And the majority of sellers are proven correct if we move under it. So what you will often see is a battle right around that area of point of control. And so if we're momentum style traders, we want to go with momentum, but we don't want to buy a break. We're looking for a retracement play, a higher low play, or if you're Dan purist, then we're looking for that back test, right? Where is that higher low going to be? That's probably one of the most commonly asked questions, right? How do I know when that daily higher low is or when that higher low is set, right? And for Dan, it would maybe be like a key EMA, right? Like if the 12 hourly 12 EMA was suppressing price throughout all of this daily retracement, and then once we recapture that hourly EMA, okay, we're going to look for our attempts there on the back test of that hourly EMA test, and then we'll throw our stop under the low of the move. Is that correct? Is that
Yeah,
a
that's one
good
of the
summary?
ways. Yep.
Right. Okay. And so for us, for from a VP perspective, we can be a little bit more aggressive even, right? Because we don't even really need to wait for that hourly bounce if we're willing to be aggressive and take plays off of where the key change would occur, that point of control. So as a momentum style trader, we can look to say, okay, well, if we don't find acceptance back under here, if we just drop and pop at that point of control, we can buy that pass back over, throw our stop under the low, and that's like what Daniel would say, that's either the higher low or I am wrong, right? So the stop is going to go right under that low. We buy that pass back over it, and we know that as long as this structure is being affirmed, then these buyers are constructive relative to the all-time high, which is obviously very good market-generated information for us to know. Because if the sellers cannot negate the breakout over the prior all-time high structure, what must be happening? Higher prices relative to the prior all-time high are being accepted by the market. So we can lie in wait in here. And what I like to do is, the way that I like to summarize it is I like to see, very similar to Dan, extension into location. So for me, just taken right from Dano, RSI extension, right? I want to know that the lower time frame, the key time frame lower. So if you're looking for a daily higher low, ideally the hourly is oversold already. And so when you're already extended into the location is where our key structures are, right? So I just put that together. If I have extension into that location, then I'm willing to take a shot on playing for a higher low here. I'll throw my stop under there. Ideally, we'll look to chop it up at either the value area high or the high of the structure, right? Take our risk out of the equation, assuming we're front loading our risk. Obviously, if you add to a trade, it's going to be a little bit different. But assuming that we front load risk, again, the TCG style, Dan style, then we'll look to exit these partials no later than the high of this structure over here. Why? Because if these buyers are going to fail, where are they likely to fail? Right? They're likely going to fail at the value area high of the structure or the high. Why the value area high? The value area is 70% of where the volume was traded in a range, which is roughly one standard deviation from the mean, right? It's slightly more. But that's the idea, right? Once you start deviating from multiple standard deviations away from the mean, the odds of there being reversion increase, right? Because very, very high deviation is not sustainable, right? And that's, mean reversion kind of plays. So that's the idea. And if you move forward, you can see how there are multiple tests of this area, right? Not only do we hold the point of control over here, but we hold the high of the structure over here. Again, as long as you're finding acceptance above it, it's being affirmed as demand. We come all the way back around, and again, you get another affirmation play over here. And you'll notice that once we break back below this structure, there is a pitch battle for it, right? These buyers here initially try to hold this guy again. We just set a simple daily lower high, which is, by the way, just off of local 3-day supply over here, and we lower low. And if you zoom in to this chart, you can see there's a very, very clear battle for you. They try to hold the value area low here. The high of this move is pretty much right there. The higher low is pretty much right off the value area low. The move over here is pretty much right off the high, etc. You can see that there's going to be a pitch battle for it. And if you cannot find acceptance back over the point of control of this structure, especially if you start failing to get even to the value area low, and then you roll over, okay, this is kind of bad news, right, for these buyers. So this big old breakout is not being negated. This is a monthly breakout. This was a monthly higher low over here. This was a monthly higher high. The breakout is no longer being affirmed because we have lost this level, 503.52, and also now we're under the low of this structure. This was pretty much the last line in the sand if these buyers wanted to continue playing defense. So you will see this concept play out time and time again. Basically, if you are finding acceptance over the point of control of the key structure, buys are reasonable. And if you find yourself below it, sells are reasonable. You still have to pick your location, of course, but that's the idea.
I'm seeing a bunch of questions. Keep those questions coming in the chat room. We will get to them in just a bit. And just a note, we do have a free ebook that goes along with this webinar. I'm posting the link for that right now. And that you just enter your email, and it's essentially notes and, essentially saves you from having to take notes right now while Lamont is talking. It's an ebook that explains a lot of these key concepts and how to draw the different value areas that he's talking about. And definitely would suggest following up and checking out that ebook after this webinar to help retain the information. So essentially, with where we stand right now, we clearly have, the top of this bounce attempt in the Nasdaq. We've essentially failed at that top a couple times now the last 2 days on the FOMC reaction, and we can, if we were to zoom in, we would have a new area to draw just because of this more zoomed in price action. But you're saying that if we break this little triple top that we're battling right now, we've got that previous structure that you've been showing us here is looming right overhead, and is that a more important key test for you than the levels we're seeing battling right now?
Yeah, because I like to look at the market from the perspective of change, right? That's helped me out a lot, right? Because any selling that doesn't negate the prior buying doesn't really create any change. And you see this kind of happen a lot, right? Like if you get you see this happen a lot with gaps, right? When, okay, you get a big old gap up and then the sellers fade that gap and it looks really bad. But if the sellers who are filling the gap don't find acceptance back within yesterday's range, what is going to happen? Buyers are going to step in, particularly day plus buyers, buyers who care about more than the day time frame. They're not just intraday players, right? If you are over the prior day session, of course, you must have day plus operators who are interested as well, right? And if we're within the prior session, then of course, these are just day traders, right? Playing against each other, right? We're just kind of an exhibition match of sorts. So I like to always look at things from the perspective of change. And for me, what is key for me to be confident as a buyer again on the monthly time frame, it's got to be affirming this monthly breakout again. As of right now, this monthly breakout has been negated. And I think we actually had an example of like a gap fade that rallied recently, I think in ES, I forget. But either way, that's the idea. So I care much more about this, right? I know that if we were to make a higher low and higher high, that is still very notable to me, right? Because then that would mean that we have local demand, right? If we create a higher low here and then break out over here, higher high, price action trend change, that still is meaningful to me, right? Because I know, okay, now that we have broken over this area, this like 5-day balance, that becomes key for this moment. That's the biggest distinction that I would say between looking at the market with these like areas of balance structures, and then looking at it from a pure price action trend perspective, as you've taught us, and I think it makes a lot of sense because you are really sick at doing things in the moment. So it kind of makes sense to me that your preferred style of analysis is what is exactly happening, like literally right now. What is the state of this current move right now? And the way that I do it is I want to know what's happening in this moment, but I put that into the context of these prior areas of supply and demand. So I'm willing to play with these buyers from an area of demand up to a prior area of supply. And I can assess how effective these buyers are if this nice clean price action trend, we just get nice clean back test, higher low, breakout above. Okay, great. We can play momentum style all the way up to supply. And this is pretty much what we do in the futures room day in and day out.
So that's a perfect segue where, the reason that Lamont heads up the swing report is because he is better than me at picking levels in advance. Where for me, as he said, my analysis is very much in the moment. I need to see it happening. I need to see the hourly trend change confirming to set a daily higher low. I don't know where the daily higher low is going to happen. I know the details of what I'm looking for to tell me that it is shaping up. So, for me on a Sunday to say to people, this is where I'm looking to buy if we drop down to this level, that doesn't really match my style and I can't really do that well. And one of the things that you've done so well with the swing report is the being able to pick out those levels in advance. So if you have an example of a fairly recent trade that you highlighted, and if you want to walk us through essentially what stood out to you in terms of why you chose the entry points of where you did and the exit points.
Sure. So the one that jumps out to me the most is actually an idea from last year that we have two ads on. And so this idea was from original idea was over here. And we kind of have to go from the top down to kind of get a good sense of what's going on. So this is probably just looks like a mess. Let me just remove all of this for now, and then we'll zoom out to the 1 month chart, right? And what we have is a pretty standard EQ. If you've spent any time in this channel, the EQ most common pattern. It's very beginner friendly, I would say, right? Like if you're going to learn any pattern at all, then like bottom fishing off of the lows of an EQ, I think is pretty solid. So the play, our original play was back here in I think May, looking for a potential monthly higher low. And this combines our two styles, right? Because we're looking for a higher time frame, higher low. This one was never confidently set, right? So we're still looking for a higher low relative to this low. And what has happened here, right? All that's happened here is an attempt at these sellers to negate this structure. And how good of a job did they do? Not very good job, because you can see with our quick reference here that the majority of the volume traded in this area of demand was all the way down here at like 210 or so. And so the sellers failed to get there, right? So again, this is a matter of change, right? Like this is the notable change. This is sellers trying to negate the change by finding acceptance under this high. How far do they advance? They don't get to the point of control. That's a notable failure. I like to think about it as like, not just what the market does, but what the market does not do. And I know that's two sides of the same coin, but we're very often kind of just predisposed to thinking about what does happen. Nature hates a vacuum, right? Although that's not really true, right? Most of nature is a vacuum, like in space or whatever, but nature hates a vacuum within an atmosphere, right? So we're looking for a monthly higher low here, and it's pretty much just a play bottom fishing the lows of this potential EQ. I know at this point now there is no EQ. I understand that. But if we're not going to find acceptance within a prior area of demand, what has to happen? If we don't find acceptance into a prior area of demand, it's either sideways or up, because not finding acceptance into demand means it's not down. Right. And so it's going to be sideways or up. And so if it's going to be sideways or up, then we can look to bottom fish off of the lows of this potential EQ. So it's early pattern recognition. It's kind of like, instead of playing the break of a head and shoulders, instead of playing the neckline, you top fish against the head to try to get that right shoulder. It's a similar concept, right? And so this setup, if we zoom back into the daily, we bring all of our markings back here. This was our original trade zone idea. I didn't trade it exactly as such. I very often won't trade it exactly as such because I'm not completely removed from making decisions in the moment, such as yourself, because we can minimize our risk, right? With a name like this, the liquidity is not great, so you do have to size down to account for slippage. But I
And this is
prefer to.
just to interrupt. This is PSA, the stock PSA,
Mhm.
public storage.
Yeah. And so I do prefer to minimize my risk, right? So if we can get it done on the day time frame, obviously we can get a more asymmetrical setup. But this was our original trade zone. I honestly forget the specifics of it, but whether or not you traded alongside with me, because we'll send out alerts for it. Actually, I have the updates over here somewhere. We'll always send out alerts for any trade that I take myself. We'll have alerts that get published to your quick updates section. So I don't take every trade, but every single trade that I do, we'll walk you through every single step of it. Not necessarily because we want you to copy it. That's not necessarily the case at all. Of course, you can do whatever you like, but there's always going to be a delay. I'm going to take the action, then I'm going to write the message out, then it gets pushed. It's going to take time to hit your inbox, and then you have to read it. So the idea is more so that we want you to be able to recreate these trades for yourself, reverse engineer them, show you the process, and again, we want to teach you how to fish. So here's our original trade zone. And it does eventually get to the target, but before it gets to the target, I put out alerts over here for an ad. And the reason why is it's a little bit messy here, so let me clean up this chart here. The reason why I was interested in an ad over here is because the original trade idea is based off of this structure holding, because we break down in here and then we rally to the other side of this structure that we just fell out of, therefore negating the change of this breakdown over here. And so why am I interested in these plays over here? Because if this area of demand that created this move continues to hold, it's either sideways or up. Right. And so after we get a little bit more follow through here, now we've traded completely beyond this structure. We're retracing again. I know that if there's no acceptance into this guy, then we're even better off, right? Then we're going to go sideways or higher relative to this structure. And here is the gateway concept coming into play, because what I really care about is this very, very large area of demand. But I also recognize that on top of that guy is this little guy, right? This little guy is essentially the gateway into all of this. And you can see how this area was affirmed over here, right? It's pretty much a pop and drop at the point of control. And so I think the alert is, I think I have to go into the archives to see the original alert. But this is essentially just buying this pass back over the point of control of the gateway structure, knowing that if we don't find acceptance in here, then we don't find acceptance in here. And if we don't find acceptance under here, then again, we just trade sideways to higher. So I bought this pass back over as an add, right? Stop under here, chop it up, take the risk out of the equation. And now we have our original position from here. We have our add from here. Eventually, they both get to targets. So this add, risk-free. Our stop is under here, and we've already booked one chop that was like 5R, and another chop was here. That's like 13R. And then we come back into the present, and again, we get this setup over here. So in this situation, the first scale that I took was not great because I was looking for the same concept over here, but based off of this structure, because this structure over here is what made this high over here. It's what made this high over here. So I made an initial aggressive buy on this pass back over, knowing that it was FOMC the next day. I acknowledged it in the update, but I was willing to take that risk because PSA kind of does its own thing. It's just kind of trading sideways, bigger picture. And so initial was here, and then adds over here, playing off of the exact same structure. This exact same guy from our first ad. So two positions down here, one position up here. I chopped it up on this move up because, again, the concept of change is coming back into play. If this breakout is not going to be negated, where are the sellers going to play defense? It should be under here, right? Because, well, that was the breakdown. And so if these buyers are wanting to negate that change, they need to have acceptance over here. So we took off half of the position here, which was heavily weighted down here, over here on the test of this level, and now our stop for these two ads are just under here. I like this trade a lot, not only because we're still in it and we got ads, but also because it highlights a lot of the concepts that we just spoke about. Obviously, there have been other trades since then, although honestly, the environment has been kind of challenging, right? Ever since the market's been just overall market's been trading sideways, swing trades a little bit more tricky, but they've still been there.
So where, just in that example, where would your stop have gone on? You said you added your initial ad was a too early, and then you got down closer to the previous range high. What would have been the okay? This I'm wrong. This isn't working.
I just gave it a little bit of wiggle room under here, right? Because this is a major support level, right? Not every support level is the same, right? A support level that breaks to a higher high, we should consider that to be more meaningful than a support level that just makes a lower low. And there's a lot of older traders, older technical analysis traders who would, what do they call it? They call it major support, major or minor support, right? A minor support just makes a lower high. Major support breaks to a higher high, right? Because it created change. It was a defense of change that already occurred, and then it made new change. So we care more about major support than minor support. So I was willing to take another shot here for all the reasons that I was willing to take the shot for this ad over here. There's really nothing that can go wrong in this trade now. We've already paid for it, our stops, and then some, even if we were to clear out every part of this position. And again, it's just the same concept that we talked about, gateway structures, change, right? Here's the gateway structure and the potential for change for exits.
So I'm going to answer a couple questions here. First question is, hey Lamont, I know you're a pullback trader, but personally, how do you use volume profile for breakout trades? So that's essentially the back tests, right? It's you wait for the breakout. How often are you watching something that breaks out and just runs away and you miss it? Does that happen a good bit because we don't get the back test?
Happens all the time. I don't know if you want to delve into this because it doesn't really focus on swing trading stuff, but I do that all the time for the futures. If you want to take these concepts and like apply them to day time frame stuff, give our chat room a shot. Hang out with us in the futures gang. We are just a bunch of knuckleheads. We're in there every day messing around. A lot of times we're putting in good work. A lot of times we're just having fun. So check it out. But for breakout trades, for example, let me see if I can think of the most recent example. I do breakout trades. Very often the breakout trade will be an affirmation setup. So now we have to take into consideration one more tool. So this is a situation where I want to see what occurs from the session to session. So I need to see what happens on the daily time frame. So here, let me just find a good example of it. Where was there? This is actually a breakdown trade. This is the most recent buy on the ES. Let me see the breakout trades. The last one was probably this guy. This was on the NQ though. Let's see for the NQ here. we did this breakout play, and this is all timestamped in our futures room. This is a gap up situation, right? And so what do I care about here? I care about if I'm a buyer, right? I want to see this higher low be confirmed. I know there's technically a lower low under here, but this one was never really confirmed. We didn't break this candle's high. So I'm still thinking, okay, there's the potential that we set a higher low over this guy. And if it's going to be over here, then what needs to happen on this session needs to be a lack of acceptance back within this range, right? So this gap up situation, you can buy this move back over the open, or you can buy this pass back over the regular trading hour side. I believe I bought the pass back over the open because I don't think that there was actually any gap fill. So if we, or rather there wasn't complete gap fill, let's see, 2095, I'm sorry, 19 and then 19. It was actually perfect back test, but I don't buy that. I don't like the, I don't want to be right there because where do I put my stop, right? So for me, this was a pass back over the open kind of a play because think about it, right? Again, it's a matter of change. The change is that we've gapped up, right? And so the goal for the sellers is to negate that change. So they have to find acceptance under yesterday's regular trading hours high. If they cannot do that, okay, how do the buyers have to stay constructive? For the cash market, the regular trading hours, they have to stay over the open, right? So if we're going to try to go with momentum here and we see this failure for these sellers not be able to enter yesterday's regular trading hours range, we can buy this move back over the open and throw our stop under the low because either that's the failure and the hold or I'm wrong, right? And this is such an asymmetrical setup because like just look at the R on this, right? Let's say you're really bad at this game, and you come in really late off of the open. You're super slow, your stop is under here, and even if you're just playing to like get here, that's probably 1R. Like even if you're just playing to get here, okay, it's not 1R if you're really bad at this. But if you're right off of the open or close to the open, it's pretty close. And for me, I was playing to get to here because this is the all-time high supply, right? So we're looking to play to get to this point of control. And wouldn't you know it, that's pretty much exactly where the market stalls, right? It pretty much stalls right there. And then the next day, the market affirms that point of control, making the low right there. So like you can see for yourself, like you don't take my word for it, to apply these tools to your own charts and you tell me how often these structures become affirmed. It must be the case because the market is like any other market. It needs to affirm or negate the prior transactions. And you understand, everybody understands this. You already have this understanding because you can look at other markets. For whatever reason, people don't compare financial markets to like the housing market or the car market. I like to use cars because everybody's familiar with like the Honda Civic. It's like always trades sells somewhere between 25 or $30,000, right? More or less. So you know that there's a lot of value established there at that price for the car. So if something like say COVID hits, right, and now these Civics are going for $40,000 and you don't need a car, are you going to buy a Civic? No, because you understand the concept of value, right? But if the market comes back down to that point of control, that $25,000 level where tens of millions, maybe not tens of millions, but millions of units, I think, have been sold for the Honda Civic, now are you going to be interested? Probably, especially if you need a car, right? Obviously, if you don't need a car, it doesn't matter to you. But that's the idea, right? We establish value by a lot of transactions occurring there. And wherever the most transactions were traded, that's not me saying that level is significant. That's the market saying the level is significant. I'm not doing anything. I'm just seeing what the market has said, okay, yes, this is important. This is a key level, you know?
All right. Thanks for that explanation. Another question we've got is Sumi's interested in the swing report. What's the performance of the last year? So the swing report we have, if you could pull up Lamont the dashboard, we've got the table that you are able to access to look at all the prior trades in terms of whether they triggered or not, whether they hit the target or not. As far as an aggregate, we don't have that data because not every setup is the same in the sense that, like Lamont was talking about, sometimes they're adding to certain setups. Sometimes, if it's getting stopped out before reaching the target, it's not a simple up 4% kind of deal. But all of the data is there for you to back test and view those picks and how they played out. So it just requires a
Yeah,
little more work.
it's not a signal service, It's we're the chart guys. We're trying to teach people, right? It's an educational service. I I pretty much am trying to get done what I do in the futures room, right? The futures guys, not everybody, not Ryan. Ryan's still a holdout, but we'll get him. But a lot of the futures fellas, they do this kind of VP analysis, and it's happened over many years. So I'm just trying to pretty much offer that kind of experience, but through swing trading. That's the objective, at least. So we don't capture the metrics for all the ideas because there's 2 ideas sent to you every week. So we try to cover all our bases essentially, right? If you're like a more independent trader and you just want levels and setups, you just want someone to look for setups for you, great. You're going to take these levels, you're going to do your own thing. If you're somebody with less time, you want to learn how to trade, but you don't want to be in a chat room, you don't want to, engage people in a futures room, a bunch of knuckleheads or whatever, then this is kind of a way for you to understand the process. And again, I think very easy to replicate after some time. That's our goal with the report. And again, you can obviously do copy trades as well if you like, but that's not our shtick.
For volume profile for a large time frame like Tesla, do you go as far back as a few years? Essentially, how far? What determines how far back you look to draw levels? Does recency matter more?
Recency matters more for the same reason why we monitor price action trends, right? But price action is still price action in the past. We still care about the areas that are important. Tesla was actually a banger. From last year was the swing report's best trade. And whether or not you use the levels blindly or if you traded alongside my alerts, you ate well. So for Tesla, this was our original swing report setup zone from last August or something like that. This was the official zone. I did not use the official zone. I pushed out alerts for how I did it. We did a day trade setup because this is our stop for the official trade zone is 8%. I don't really want to size down to the point for 8% risk. So I took a day trade in here. I'll hide this. And again, all of these alerts for those trades. I believe I can just search right like this. Hang on a second. All of the updates for any action that I take is going to be here. So it's all the way back in August, or yeah, when all this day trading activity occurred. But I'll just walk you through. You can like take a picture or whatever if you want to look at it all. But what we did was here. So again, whether or not you use the official zone worked picture perfect, right? You come into the trade zone. This is the trade zone over here, highlighted by this date and price range box, and then this long position, right? We were looking for a hold of all of this structure, right? And so why do I care? This is recent structure. If you zoom out, right, then there's a lot more stuff going on here. So I am taking into consideration all of this stuff. I recognize that we are in bigger picture balance, but also, I see that we held the lows of this key structure over here, right? Which is what dictated this low over here, right? Which is what do have a break over here, but you don't really see that much follow through. And then this becomes major support because it holds it and then you go to a higher high. So what happened here was essentially like an inverse head and shoulders kind of a dealio here. And then you had this big rip up over it. So this was just a back test play, excuse me, knowing that, all right, well, here we have this area that's sitting up. Again, this is the gateway structure, right, into all of this demand here. But there's a lot of value that was established here to create this kind of right shoulder. So I just split the difference, right? I think, okay, because I don't expect things to be perfect. In an ideal scenario, it would come back test this high, and then rip. But that's not how things shake out, right? That QQQ day trade example is like, it does happen fairly often on the day time frame, but typically that's not really what happens, right? Typically you'll get a break below it or even not even come back to it. And then if we can resolve this bullishly, obviously then that works out fine. So my setup was in here, and this is very nuanced in my opinion. It's not an easy trade to replicate because I was just kind of eyeing it here. And what do I care about? I care about this point of control, right? Not only do I care about this point of control, the market cares about this point of control, which again is affirmed by all of this balance around it. The high of the day for these two sessions are pop and drops over the level. And if you zoom in to all of what was happening over here, and you just go back to where that was occurring, this is where all that action is. Here's that major point of control. And I'm thinking, all right, if we can get a setup that affirms holding over that point of control, then I'm in, right? And so on this day over here, you'll notice that we get a strong open over the prior day, over the value area of the prior day, over its point of control. We move down, We do not find acceptance below the point of control. We moved back over it, and I was actually slow here. I did not buy the pass back over the open. I bought the new high. And why did I do that? It's because for all of these other sessions here, when we're battling for this major point of control, this guy over here, all of these prior sessions, you test the value area low. Here's the open, test the value area low. That's the sellers getting to the other side of balance. Balance should always be lack of acceptance beyond the value area high or the value area low. If you continue to see no acceptance over the value area high and the value area low, then we're just balancing. And so this day, value area low test. This day, value area low test. We break under the value area low. This day, value area low test. This day, value area low test. This day, value area low test. This day, they did not get there. So to me, this was early indication. And again, I could have been wrong. Like this, I could have easily been wrong. We could have easily come up, broke over the high, not found acceptance, roll over, we stop out. That's trading, you know? But that's not what happened. We got fortunate here, right? Wherein this was much, much lower risk. Remember, the official trade zone was 8% risk. It did work out well. It was a very good R, like 5R, so you know, it would have been fine. But this is only like 2% risk, if that. It was like a point and a half. So you can be sized up significantly more on the day trade kind of a setup and then look to swing a piece. Again, very much like how Dan would do it. I don't think, I mean, nowadays you do take trades on the daily time frame, size down for it, but for a long time you didn't, right? As far as I understand, as long as I've been stalking you, I mean, watching you, that's not, you know, what you've done.
Follow-up question was, how do you add to your swing position? So you've gone over that a little bit. It's essentially a back test. You know, if you've got a nice profit cushion from your initial position, and then you back test an area, there's a lack of acceptance under what was previous resistance and is now acting as support. That's essentially a bit of a green light to potentially take on some more. This is something I'm trying to work on. You know, if you ask me what's the number one thing you're trying to improve in your game, it's adding to swing trade winners, because I very much so, you know, as soon as I add on, now my break even is so much closer to the current price action, and I'm risking, you know, giving back the gains that I already have. But it's definitely a mental thing for me. But I think you've explained that fairly well already in terms of where you look to add.
That's funny. We're on the same journey right now. I'm the same. We're a bunch of fellas in the futures room, particularly Trend. His name's not actually Trend, but the user Trend. You know, he and I, we've both been really kind of focused on adding to the trades because of that book by Tom Hogarth, Best Losers Win, where you know he advocates for that. And obviously, we were raised in TCG, so we front load our risk, we take the risk out of the equation, and then we sit pretty. And psychologically, that's so chill. All
It's
right.
so
It's like
nice.
it's the nicest way, right? Psychologically. But at the same time, sometimes, you know, when the trade works for you and you're like, oh man, I only got 25% of that on, you're like, could I have gotten more? Which is honestly a dangerous mentality, right? Like I never really like to think from the perspective of how could I get more? Because I find that, you know, it's a very aggressive place, environment, the market, right? If you think about everybody who's playing in the market right now, most of them are thinking, I want the most out of everything, right? And so if you're dealing with it like an entire arena full of hyper aggressive combatants, what do? You know, are you going to try to match their energy and try to take everybody down? Or do you just kind of like, you know, hang out on the side, let everybody, you know, fight each other, and then when everyone's tired and thirsty, okay, now you come out and, you know, maybe poke somebody in the side or whatever. That's the idea. I find that that's been very helpful for me, but I do also advocate for getting the whole perspective. This is why, like, I think everybody who trades low time frame, you should trade high time frame as well. And if you trade high time frame, you should trade low time frame as well. Because you're going to learn, you're going to get perspective, and then you're going to understand how sometimes the tactics that you do on the low time frame might be applicable for the higher time frame, might even be better on the high time frame, and vice versa. So you get this positive feedback loop, right? Because there are some strategies that are just much better suited for longer term stuff, right? Like running the wheel in an IRA. I think that's probably one of the best context of running the wheel, right? Because you have time on your side. If you're sitting on cash, you know you're just scaling in, DCAing for your retirement accounts. You might as well run the wheel. You know, earn yourself a little bit of premium, maybe even position some shares by selling cash secured puts, and then you get good perspective. You know, then you start to realize in the low time frame, maybe I don't have to be so aggressive. You know, maybe I can try to be a little bit more patient. If you are over trading and you constantly, like if you're on the day time frame and you're taking like dozens of trades a day, try handling your retirement account stuff for a while, right? Think of get used to dollar cost averaging, get used to buying weakness over many days, get used to trimming into strength over many days, and then you'll start to realize, okay, on the low time frame, I'm probably being too aggressive, right? I don't need to be so aggressive with so many attempts. I can be a little bit more patient, a little bit slower, let the market give me some more information so that I can have a little bit more confidence in my plays and not be so frenetic. For me, that has been huge. I always recommend it to people. I think you kind of want to see it's kind of if you're in a debate, right? If you're in a debate, you got to know what the other person's perspective is. Otherwise, you're just yelling your perspective, right? And when you understand that other person's perspective, you start to realize nuance about your own thoughts and ideas as well. So I think it's very important for operators to do both ends of the spectrum.
Good answer. Traders got a good question. Curious about how this can be used with simple support and resistance analysis. When should we use this analysis over that, or should they be using complements? I would say that this is just a bit of a more complex version of support and resistance analysis. This is and obviously the volume being the major factor. If you're just doing simple support and resistance, volume is not in play. Whereas this is almost like a zoomed in, looking under the hood type of style of support and resistance. So I would say that this is just a bit more complex. And, for me personally, full admitting to everybody, I don't even pull up the volume on the right side there. The way that I utilize this is, because I've adapted my style that has worked for me. And I don't want to massively change my style. I want to incorporate little bits of other styles and essentially, just try and improve on things. I will just mark my support and resistance levels where I know there's the most volume. If I see a certain amount of price action in a sideways range, I know that's where the volume is taking place, and I don't need to specifically see. That's also, me being 14 years into the trading journey. And so I would suggest, if you're on the newer side of things in your first few years, that you do pull up the volume and have that confirmation to be able to see things a little bit more clearly. But just wanted to explain how I personally use it. It's essentially just drawing these zones out, viewing them more as zones than just key individual levels. And again, watching the term you use a lot, lack of acceptance. That's something, I used to would just call it a fake out. Whereas if you're referring to it as a lack of acceptance, I like that more because I don't know. It's almost like that I'm in more control. Like a fake out is, oh, what can I do? There's nothing I could do. Whereas if I'm observing, a break below a key level and we pop right back above it, rather than viewing that as a fake out, viewing that as a lack of acceptance, it almost has me visualizing the buyers and the sellers. And the buyers are saying, nope, this is not a new price range. We're buying it up. If it's popping under this level, there's a lack of acceptance at this price, and it pops right back up over it. And that's one way that, again, it's just a concept. Conceptually, it has shifted a bit how I view support and resistance, which I have found beneficial.
Like less final, right? It's something that's more dynamic. You have to continue to assess it, which is, how everything is, right? Like confirmation is not real, like contracts breach all the time, right? Flights get canceled due to weather, whatever.
How do you play session to session with developing point of control? Do you have more importance to yesterday's point of control or relevant structure weeks ago that we back test? Again, you've already gone over this a bit, but seems like you care most about the high and the low the previous day, and
Mhm.
essentially whether we can break above the high of the previous day and hold it. If you want to quickly answer that one.
Yeah, sure. So I care for when it comes to developing point of control, that is my dynamic indicator. So for Dan, it would be an EMA. For me, it's the developing point of control. I'm 90% of the time, I use the developing point of control and value area on this chart. So I usually have a three-pane chart here. And this low time frame 1 minute chart is usually where I'm dealing with the developing point of control because I want to see where is value developing on the day within the context of where is value developing from session to session here. So for example, we hit this sell in the futures room and it was a nasty sell because what happened here on this day, on the 17th, if you pull up the daily chart on the 17th, That's over here, right? So here on the daily chart, what occurred? We broke over the July 2024 high with little acceptance, and we failed to get to the point of control of the gateway structure, this guy, which is the gateway into all of this oversupply over the July 2024 high. So from a day trading perspective, knowing that we're going to set to open right there under the July 2024 high, and you'll notice that we missed touching it. So the initial move does not quite get there, right? And then if you look at things from a session to session perspective, you're opening up right at yesterday's point of control as well. So that key daily level is right there. The buyers do not get there. We get to the prior session's point of control. We know that if we can't get over the prior session's point of control, these sellers are positioned well to move value lower to lower. We can sell that open, stop over the high. And then the exit here, all of this balance is occurring here. The targeting was this guy. This, if you just zoom in, like that targeting, like this exit was great because we spend the entire day fighting that level. So I don't want to be here and see who's going to win this fight. I just want to take a little bit, be done with it, and then walk away. So the developing point of control then is on this low time frame chart because we know, okay, so we'll go back to that day, for example. What was that? Let's see, what day was that? That was the 18th. Okay, so on the 18th here, we zoom out a little bit. We know, okay, even if you didn't hit this sell right off of the open, which is a tricky trade, right? Like I like this trade a lot because it's super asymmetrical. It's honestly something that I picked up from Mr. F, one of our members, right? One day he talked to me about a trade and he said, it's got to be right off the open. And that just sparked my interest because I used to never do that. I would play the opening range breaks. I would wait for there to be an opening range and then I would look to play the break of that. And he totally changed my mind because he called it out. That was his idea. And it was a freaking banger that day. And I was like, man, I need me some of that. And so even if you don't hit this off the open, the developing point of control gives you an opportunity here. Because if we're under yesterday's point of control, which is right here, so that's this guy, I will sync this in the layout so it's kind of easier to see it, right? That's this guy over here. Okay, this guy is this guy, right? And we know, okay, dang, I didn't get it, right? I didn't get that move off of here, but we're still under yesterday's point of control. And now we've moved under the daily, the developing point of control of this session. The sellers have nothing to worry about. If we're under yesterday's point of control, meaning value is likely to move lower session to session, they're positioned well to move value lower session to session, and we're under the developing point of control for this session, meaning they're positioned well to move value lower on this current session relative to just this session, right? So it's all about top-down analysis, right? We're looking on the daily time frame first, then we zoom in on the daily time frame. A key level failed to be tested. From a session to session perspective, we're under the point of control of the prior session. On this current session, we're under the point of control of this current session. So if that's going to be the case, you can sell this move under this point of control, right? It's not the best location, but it's not really off by much. It's like 5 points or so, right? So you sell this move back down under it. Your stop is either over this high, probably if you're, again, like a price action trader, or your stop is over here and you're thinking, okay, as long as you don't break to a new high, then I'm going to stay with these sellers because the high of the day is right off of yesterday's point of control. So you can hit that sell here. Stop is over here. You probably want to start considering taking an exit at the prior day's value area low. Not necessary, but that's probably where you want to start considering de-risking because if these buyers are going to start playing defense, think about it. If the buyers are going to play defense after moving under yesterday's point of control, if they want to stay in balance to play defense, they have to defend the value area low. You can't find acceptance beyond the value area low. So you look to take your exits here, which I think is pretty good R, even if you're pretty late to the party here. For me, the ES is so liquid that when you do a stop sell, like one tick below, you will get that fill at one tick. There's not going to be slippage on the ES. The ES is super, super liquid. I think it's the most liquid asset. I'm not sure. Either way, throw your stop over the high. Stop is under the value area low. That's 2.3R. And for the ES, that's 11 points. That's a pretty hefty move, even for just one contract. So that's the idea. And then you get another setup here, right? So if you're a Dan style trader, you're just looking for a 1 minute lower high. This is so much follow through under this break. The odds of us seeing a 1 minute lower high are pretty good. If you're a Dan style trader with a volume profile, I don't know, influence, if you're VP curious, right? Like myself, then you're thinking, man, these buyers, they didn't even negate the change of this breakdown, right? And so now they're just floating over the development point of control. And at this point now, this is a back test of what? Not just the development point of control, but also of yesterday's value area low. So we know then that if we can hold under yesterday's value area low, we're actually moving value lower session to session. When you're under the point of control, you're just positioned well to do so because you can be under the point of control, right? And then not find acceptance under the value area low and then just do this. Value is not going to move lower. It's just going to be overlapping to sideways, right? But here, on this back test here, right? I'll just drop a ray so it's easier to see here. This is a potential failure, right? Not only to fail at the depot over here, not only to fail negating the change of this breakdown, but also of the value area low of yesterday. So you can sell this pass back under the value area, the development point of control, knowing that that would also affirm the value area low rejecting price, which is the best case scenario for the sellers, right? Besides a break of the regular trading hours low, right? The break of the regular trading hours low is the real win, right? For day time frame operators, because now you're aligned with day plus sellers, right? So this is a super low risk trade just to get here, just to get to the low, just to test the double bottom is very, very low risk. Right. So anyway, that's the idea. You get another Deepak play over here, and then another Deepak play over here, and then this is where price starts to stabilize.
We're gonna go through the whole day.
Okay.
So for those that are interested in the day trading, what Lamont's going over right now, you're looking for Chart Guys membership. Hang out in the futures room, and they are all day talking about the intraday intricacies, small time frames stuff. The swing report, obviously very different in terms of time frame focus and, laying out the trades in advance every weekend. So if you'll pull up the swing report as we wrap up here, essentially what a report on a Sunday is going to have included in it.
Sure. So the dashboard is going to look like this right here. And if we just go into the recent issue or whatever, you click into it. And the market update, that's public. We share with everybody this quick little technical breakdown of what's going on, give you updates on some key levels and whatnot. Every week there's going to be an update for any ideas that are in play, especially for something that I'm doing. There will definitely be an update because if I'm doing my job as to the best of my ability for my own personal standards, I'm going to give you what I'm looking out for in the week ahead first in this update video. Then as it sets up during the week, ideally, I'm going to let you know in the pre-market, this is what I'm interested in. Very often I will share a trade zone because again, we're not trying to encourage copy trading, but I try to give you this information as live as possible, right? So that if you do try to respond to it, then you have the most potential to do so. The ideal situation is I'm going to get a session to session setup. I'm going to share that setup in the pre-market. I'm going to trade it more or less exactly like that. Sometimes I'll say I'm going to trade it exactly like this, just using the limit orders and targeting. So that's what the update video is going to be. Then we'll have new ideas, fresh ideas. That's what give you a quick rundown of why these ideas are picked. Dano also will give you an update. So here's the Dan update, which we should probably move up, but there's the Dan update. He'll give you a rundown as well with whatever he is doing, and that's really it in a nutshell. And you can always reach out to me for emails. You just hit me with an email if you have a question. A lot of times I don't cover something that people are trading. I didn't take that trade, but people are in that trade, and you can just shoot me an email, and I'll give you custom counsel for whatever circumstances you find yourselves in.
And then throughout the week, again, as Lamont mentioned, if there is something that is happening live, there's a quick update that goes out and that'll hit your email or be on this dashboard. And if you'll click GDX, I'll just give an example of recently. My main focus was GDX. And then I quickly realized the junior miners are actually stronger than the senior miners and their setup is better. So I was essentially saying, I've got GDX, but any ads, I'm looking at JNUG. Because essentially I just recognize it, in the moment I see a day of trading and I recognize I'm in the wrong name. They're two very similar names. They're doing the same thing, but one of them's doing it a little bit better. And so that was my way of just essentially saying, we were looking at this name, but this one's probably the better one. So again, just something to keep an eye on and ensure that, sometime those updates will go into your junk mail or whatever in Gmail. So you want to ensure that you flag those as not junk so you get them in a timely manner in the trading day. See if Lamont's volume profile style for swing trading is for you. I certainly know that I've learned a lot. And again, the futures room, if you're looking for the full-time dive in head first insane amount of information, you want to be in the Chart Guys community, this is a standalone swing report, its own thing. So feel free to ask any questions from here on out. We're going to wrap it up right now, but we'll be sure to answer those as we go. And as Lamont just said, feel free to email. What's your email, Lamont? Do we want to broadcast that?
Yeah, Lamont, lamont.yu@chartguys.com.
Thank you. All right. I appreciate all the info, Lamont, and looking forward to continuing to slowly add volume profile style to my own analysis. And again, seeing plenty of people that's now their main thing because of you. So that's always awesome to see. Keep up the great work. Thanks everybody for tuning in. And make sure and check out that ebook. Ebook link. I'll post that again. But again, it's just essentially a condensed version of what you just saw to help you retain the information, because there's a lot. And that's the other thing. You got to, we have other webinars that we've done, but this concept, you got to stick with it, and it's going to take months in terms of you fully grasping it. So it can go over your head the first time like it did me, but stick with it, and it will start to make more and more sense the more you expose yourself to it. As always, do good things, and we will see you next time.